if you're running a business, it is always important to speak to a financial advisor. Whatever business you're doing, it is always important to speak to a financial advisor. And today, we're advising you on the permanent whole life insurance coverage. What is the permanent whole life insurance coverage? All right, guys. So this is for the big guys. This is for the guys that have got money from, let's say, $80,000 apart from their normal earnings. Now, if you are a person, let's say you've got an inheritance, so you won a lottery, or let's say you've got a grant, and you're thinking, what is the most productive way to be able to make use of this particular money? Now, a person would say, first of all, put it in a tax-free saving vehicle, let's say like a TFSA. We all know TFSA has got a limit of $7,000 for a year, so it gets maxed out easily. So a person who's got 100K, we easily get maxed out for, let's say, a TFSA, that's 7K annually. Now, an FHSA is a first home savings account. Someone who's also got $100,000 or $200,000 will easily max out an FHSA. So where do we decide to go? We decide to go to permanent whole life insurance. Now, the permanent whole life insurance is a capital intensive kind of coverage policy. Now, wait for me. Here is where it gets better. Now, the permanent whole life insurance lets you to be able to pay an annual premium, not monthly premium. So you can put an $80,000 in a permanent whole life insurance as long as you're sure that you've got the management skills, that you've got a job, or that you have a recurring contract that can enable you to be able to have a yearly premium of that same amount, be it 80K, 90K, 100K. Why? Because if you get a permanent whole life insurance coverage, you are bound to be able to have a coverage of over like $3 million, $2 million, and $3 million. By the way, this is for Canadians and this is for Americans. It's in the US and also it's in Canada. Permanent whole life insurance coverage. They give policies with coverage up to over 2 million to 3 million. Now, the good part of it is this: when you put in that 80,000, 90,000, 100,000, as the case may be, you have the ability after a certain months, which is called the waiting time, for you to be able to get more than that 80K or 90K or 100K you put. Let's say, for example, you put in $100,000 as a premium. So every year on your permanent